Whether we like it or not, we have to live with it. Let's grasp the nettle. Cool Logistics Asia is the 6th edition and the first digital edition, which is going to be held alongside Asia Fruit Logistica. And I'm extremely grateful to have alongside my friend and colleague, Alan Robertson from Webster Robertson, as an experienced reefer and container consultant to steer you safely through this opening session.
Thank you, Alex, and welcome everybody to Cool Logistics Asia. As Alex has just said, this is our first online digital event, and that's taken quite some time for Alex and his team to actually put that together, for which I'm extremely grateful, and I'm extremely thankful to have the opportunity to speak to you about the exciting agenda that Cool Logistics Asia actually has put together. What I would like just to add by way of introduction is that for those of you who don't know me, everybody knows Alex, but for those who don't know me, my background is entirely in container shipping and entirely related to reefer. We've carried out a number of projects on how to develop further the cold chain, how to minimize risk to the cold chain, and also that is never more important than it is today in the context of COVID-19, and also how that might develop over the next year or so. We have many presentations over the next event, which you're, I think, going to find really interesting on not only COVID, but also how different experiences relating to the use of containers, the use of assets, the use of technology, and how that relates to overall cargo security. So we are looking forward to all of those. And also we're looking forward to a new event next year, 2021, where we genuinely really hope that we'll be able to meet in practice and face to face. So, let's look forward to that.
It is my particular pleasure to be able to welcome today as our keynote speaker for Cool Logistics Asia, no one less than Andre Simha, Global and Digital Information Officer for Mediterranean Shipping Company. Andre will speak to us about the future of refrigerated transport in the era of digitization.
Last month, I talked about avocado. This month, you might expect me to talk about shrimp or avocado and shrimp cocktail. I could do that, of course, but actually, I want to talk about the whole meal. So last night, I had dinner with friends in Singapore. We had avocado and shrimp cocktail as starters, lamb for the main course, and cherries for dessert. Now, how could I do this with the lockdown in Switzerland? Digitally, of course. It's called a virtual dinner. And we ate the same avocado from Peru, shrimp from Ecuador, grass-fed lamb from New Zealand, and cherries from Chile. Really? I wish. Now, if I want to have that scrumptious meal with my friends across the ocean, what is it going to take? Let me repeat the 3 main challenges, as these are not going away anytime soon. Volumes, changing the game, and it's not just about containers. So in the next 15 minutes or so, let me take you on a journey on how we can continue to feed the world together in a smarter and fairer manner. The Asia-Pacific region is now increasingly into high-quality food, and China is the biggest importer of reefer containers. For example, the volume of shrimp imported by China has tripled and is forecasted to grow 17% year on year. So as an industry, we have 2 options. Each of us can go about it on our own, or we do it together. If we do it on our own, we will all invest substantial amounts of money and people, and in the end, our customers will not reap the benefits from interoperability. If we do it together, we can share some of the costs and the research and ensure we give our customers a solution on time. From my experience, technology can be a differentiator on the short term, which is why in the consumer electronics industry, it's all about innovation and being quick to market. In shipping, we view technology as a long-term enabler. Why? Well, if you look at the size of the challenge and the investment that it will take, it's only the long term in which we see the returns over and over again. For us, it's not about differentiating, it's about maintaining our relevance. And if we don't do this, somebody else will. At MSC, we're more than just vessel captains and maintenance crews. We see ourselves as a service provider to the end customer, which is why the customer experience is so important to us. And the same goes for ports. We know of examples where some ports have chosen to include and invite others to join them in creating something where everyone wins. We must never forget that digitalization is only one part of transforming our industry. The challenge is enormous, and there is a way forward, and here's the first call I want to make. We move the world, so let's be smart about it together. I recently posted on LinkedIn, what digital transformation mistakes should we avoid? Within 1 hour, I got over 20 comments. And one of the comments from a large carrier said, if we want to truly care for our customers, we should look beyond our own little turf. Absolutely. And we acknowledge that it may be difficult for some to invest in digitalization. However, only mass adoption will make it accessible to everyone. What we're doing at MSC is not different from what our industry peers are doing. However, our goal is to share and be interoperable together. And it's not about replacing people with digital technology or competing with other carriers. It's about meeting the future demand as we become 10 billion by 2050. Back in 1980, we were 4 billion humans, and we shipped 3 billion tons of goods. 40 years later today, we've doubled our population to 8 billion and multiplied by 4 times the cargo to 11 billion tons. By 2030, we're going to have to find a way to ship another 5 billion tons. But we don't have 40 years to get there, and the revolution of bigger ships and the container has already happened. We recognize this need of meeting the growing volumes of the industry. And when we spoke to our customers from different sectors, they all confirmed that they want to be in control of what is being monitored and how exceptions are being dealt with. Needless to say, they want reactivity, traceability, and the inclusion of an encrypted private communications channel. And to this end, we've launched a series of pilot projects which are in progress as we speak. So of course, we're not going to change the world in one go. We're going to do it step by step, route by route, product by product, together. Now, with the permission of the non-techies in the audience, allow me 2 minutes to satisfy those who are digitally inclined. We've been offering smart dry containers for some time with measurable success, and we're now targeting mass adoption. We're doing the same with reefers, although it's a more complex challenge because we need bidirectional communication, connectivity to additional sensors, and the ability to communicate on land as well as at sea. To run select pilots and learn what gives our customers the best value and experience for the money, we've already made over 17,000 of our reefers smart. We've also equipped 70 vessels with onboard communication networks. So the MSC objective is to prove that a modular, scalable, and open IoT architecture is the one to go for. And this will allow interoperability between MSC and other ocean carriers, reefer container operators, in a very flexible way. For instance, by enabling the onboard roaming, containers on board any equipped vessel can therefore report back to their respective backends. This allows seamless remote monitoring when at sea, as well as the local monitoring by the vessel crew. Now, unlike what most people think, the first to benefit from the solution will be the crew members. They will no longer have to be exposed to the elements to verify the readings of a container or to make adjustments. After that, the smart customer will benefit from improved monitoring and increased reactivity. From a technology point of view, the future standards will also allow customers to customize the final configuration. And Only once we get the economies of scale will a shipping company such as MSC benefit. Even more reason for us to do this together with speed. The industry needs more business cases and pilots, and although we have a limited number of resources, if you have a vital endeavor, please do talk to us. What I'm saying is critical to our success is you. We fundamentally believe that a collaborative effort towards establishing new standards has to become the norm. This is what we see as a game changer to lead a more digitally advanced industry as a whole. And that's the step we need to take together to challenge traditional business models and drive the entire supply chain towards a new era of connectivity, transparency, and efficiency. Let me give you an example. If you're shipping a smart container from South America to Asia, for example, you may be using different carriers. Now, only if these carriers have implemented a compatible communication solution on board can the customer have an uninterrupted service and not go blind at any point. Personally, I believe in a win-win-win solution by sharing a unified digital ecosystem, one that is defined by all of us working together. A concrete example is the creation in 2019 of the Digital Container Shipping Association, DCSA, a neutral, non-profit association driving standardization, digitalization, and interoperability in container shipping. Initially conceived as a carrier-driven initiative, today we want everybody to have a say. Why? Because standards require that everybody is on board. Now, besides the founding members, Maersk, CMA, Hapag-Lloyd, ONE, and of course MSC, we now have Evergreen, Yangbing, HMM, and Zim on board, and we hope other carriers will join soon. Since its inception, we've been really busy, and we've already developed 6 important standards. 1, the Industry Blueprint 2.0, which is the basis for processes, milestones, and messages for the container journey. 2, track and trace open APIs to achieve alignment and multi-carrier tracking. 3, IoT connectivity, which allows interoperability between smart containers at the radio interface level. 4, operational vessel schedules to enable automatic sharing of vessel schedule data between carriers and operational service providers. 5, load list and bay plans to enable communication of container load volumes and stowage details between VSA partners, terminals, and ports. And ultimately, this allows for optimization of stowage, load, and discharge processes. 6, literally 3 weeks ago, just-in-time port calls to improve communication between ports and vessels and improve sustainability. And soon, number 7, e-bill of lading. So watch this space. So my second call for this audience is visit dcsa.org, give us your feedback, and ultimately adopt these standards. Which leads me to my last message of today. It does not stop at containers. And to ensure that as much shelf life is passed on as possible, each link in the cold chain depends on the best practices all along the supply chain. To embrace the full potential of IoT, we need to look at the entire journey from the end client perspective. If we want this to work, it's more than just what's happening inside the container. We need to know what goes on in the truck, in the port, in the customs house, on the train, in the warehouse, and ideally, even in the shopping bag. And this is why we need to get you and all of you on board. We're in this game together. Now is the time to agree on the rules. So back to my meal. The challenge to make this happen is all about just in time. No matter where you are in the world, no matter which port you use, which shipping or trucking company, you can count on delivery happening exactly when you expect it. I want my avocado just ripe, my shrimp just on time, and my meal as green as possible. So to sum up, I'm asking you 3 things. We move the world, so let's be smart about it together. Visit dcsa.org and help us with the mass adoption of standards. And 3, as an industry, we need more business cases and pilots, and we'd really love to hear from you. Thank you very much.
fantastic, interesting conversation, presentation that you gave to us. And I would like to ask you a question. My first question would be regarding these pilot schemes that you are prepared to develop in conjunction with customers. What are the issues that you are particularly looking for with the customers in order to qualify for these pilot schemes you're developing?
Thank you, Alex, and thank you for having me. I think we would prefer to do a pilot with a customer that really controls the supply chain from A to Z, and someone with whom we could have a very close working relationship to make sure that we can really work on a day-to-day basis and get the feedback we need to better understand the needs of the customer. Very often we think we know everything about the customer, but I really like to understand from a customer perspective what it is that makes sense for them. So I'm looking for a long-term relationship.
And I believe is it to be a cargo owner we're talking about? You're not really looking at third-party logistics service providers, freight forwarders, for example, who would partner with you?
Well, to be honest, of course we could work with a freight forwarder, but I think I would be interested in really talking to the cargo owner to understand, their logistics and their supply chain and how we can help them. I think if we talk to a forwarder, we may not get that insight, if you see what I mean. Yeah. But of course, if that has to be the case, we're not against it.
Mm. And again, amongst the customers you're looking for, are there any particular type of customer you're looking for based on possible existing experience you have got with your first pilot project?
Well, I think today we have two pilots essentially in the pharma industry. We would be really keen to look at fruit, for example, perishables, where we can really look at the monitoring, from the beginning, from the loading of the cargo until the delivery, being able to monitor, temperatures, humidity, and such, and possibly help on the ripening processes. So if we could go through that whole sort of set of operations, I think the results of the pilot would be more interesting for all of us.
Very interesting, but as I understand, that only depends on as long as you have got custody of the cargo inside the container.
Good point. Of course, as I mentioned, previously, we're equipping the ship so that the ship can communicate, or the container can communicate with the ship, which is, of course, an important part of the process. And of course, when the reefers are on land, we use GSM for communication. So, as long as the container is under our responsibility, everything is, obviously within the scope of that offer. If the customer would like us to monitor the container outside of our responsibility within his or her intermodal organization, then we would need to define the terms. But yes, we could provide that as long as the cargo is in our container.
This is exactly, to me, when we are looking beyond the turf of containers, basically what you were talking about in your presentation, is that you have achieved through DCSA, I understand, a cooperation between the other, or a number of the big competitors of yours, the other ocean carriers. But as far as land transport, we are not there yet. Could you briefly tell us how you see that progression from ship to land in terms of tracking not just the container, but also the actual cargo?
That's a good point. And I think, the basics are quite, simple. We try to, as we do with DCSA, building standards is essentially building a foundation. So the foundation is the standards. How do we create the messages that everybody can understand? How do we agree on the codification? How do we agree on some of the technology that we use, for example, in IoT? So that's the basis. And the basics there is that one of our containers goes on another carrier's ship, and it can continue to communicate if that's what we need. So that's the basics. On land, obviously we have the GSM networks like our mobile phones, which helps us to continue to monitor the containers. We know that some countries could be complicated. We know that we have to deal with the different country regulations, but overall, I think what we will probably be continuing to work on is perhaps the way we communicate within terminals and depots, where perhaps we can use methods that are less power consuming, for example, than GSM. So that's something that we continue to work with.
Very interesting. We are coming already almost to the end of our conversation, but I just wanted to raise, going back to the issue of the first pilot scheme that you have started with in the pharma sector. Now, as we'll be talking at this conference, not just about fruit, but also other cargoes, such as meat, which of course has been a tremendous interest in the China market. We are looking at what type of cargo would be best suited for a pilot scheme in terms of consistency, value, and potential market.
Well, that's again a good question. As you know, I'm not a huge reefer expert, so I have to be honest. But I think we're looking at cargo that has a certain value. That way we can demonstrate the value of the proposition to the customer. I think it's as simple as that.
Thank you very much, Andrew. We have now reached the end of the conversation.
Thank you, Alex.
I'm looking forward to continue the discussion with you. Thank you.
Thank you very much, Alex. Thank you for having me.
This is Jonathan Beard, who is responsible for strategy infrastructure at the well-known consultancy of Ernst & Young based in Hong Kong. Jonathan will speak to us about supply and demand.
Hello, everyone. I'm going to present some information and discussion on what is happening in terms of the demand and supply for logistics and transportation services, sea freight, but also air freight, how that's being affected by COVID-19, and what we might see on the other side. This slide puts the demand shock from COVID-19 into a historical context. On the left is world merchandise trade volume. This is from the WTO in April of this year. So this is showing containers, non-containers, liquid bulk. The blue line you can see showing the trend up to 2009, sharp decline because of the global financial crisis, and then the rate of growth being knocked onto a lower trajectory. We can then see on the right-hand side of that graph, green optimistic scenario for the impact and recovery from COVID-19, and red the more pessimistic scenario. And it's fair to say that as the impact of COVID-19 has endured, as countries have gone into second and third waves, that the international forecasting bodies have generally become more pessimistic. The IMF in April of this year was projecting a global economic contraction of 3%. In July, it revised that to a contraction of 4.9%. On the right-hand side is the trend for seaborne container trade growth. Again, you can see the sharp declines for the global financial crisis and the projected decline in 2020 for COVID-19 and recovery. And these are forecasts made by Clarksons in April of this year. The point to note, though, is that again, the rate of growth has been slowing. The yellow line showing the compound annual growth rate over a 10-year period, dropping from 9.9% to 9.1% to 7.3% and 4.6%. This reflects lower overall economic growth, but it also reflects a declining multiplier. Each unit of GDP growth is delivering a lower increase in containerized trade growth. That multiplier was 3.4, 1990 to 1999, 2.6, 2000 to 2008, and 1.4, 2010 to 2018, i.e. 1 percentage point growth in GDP was only generating a 1.8% increase in containerized trade. That in part reflects a declining rate of growth of liberalization, adverse sentiments from governments, increasing tariffs. We have not seen big international global trade deals of the scale we used to see in previous decades. And also, of course, the China impact has largely played out. China joining the WTO in 2001 gave a significant spur to global trade growth and liberalization. That is not going to be repeated. Also, the rate of containerization has slowed. Those products and goods that were going in bulk or break bulk and then transitioned to containers, that process has also largely played out. So the rate of growth is slower. So when and how will global demand recover? In the top left is a question we posed to around 1,700 respondents on an EY webcast in May of this year. We asked, when do you expect global economic growth to return? 32% said in the first half of next year and 41% said in the second half of next year, i.e. the vast majority not expecting growth to recover until 2021 or even 2022. We then asked probably the more important question of how do you expect global supply chains to restructure, i.e. when growth recovers, is it going to be business as normal or are we going to see some fundamental changes? Over half of respondents thought there would be significant geographical restructuring with increased nearshoring and multi-sourcing. 34% felt it would go even further and include reshoring, i.e. production capability actually coming back home, so a US manufacturer moving back their supply chain and production capability. The two segments at the bottom of the slide are surveys from other companies of North American manufacturers and consumers, again echoing some of the sentiments and an indication that there could be some significant restructuring. Some of this, of course, predates COVID-19. We mentioned earlier the trade tensions that are leading to certain reassessments of supply chains. It's also true that developments under Industry 4.0 and advances in robotics are facilitating reconsideration of supply chains. Even in sectors such as textiles, the latest developments in automation mean that unit costs of productions in, say, Germany for a basic cotton shirt can start matching some of the lower cost locations in Asia. Now, while these make up interesting case studies, the more interesting question is how widespread is this truly going to be? The scale of the Chinese production base cannot be matched by any other location. Nowhere else comes even close. The graph in the middle shows how dependent and intertwined production capability in various countries is with manufacturing and supply chains in China. This is the share of all imports of intermediate manufactured products coming from China in 2018. And it shows the linkages between Cambodia, Vietnam, Indonesia, India, Brazil with that Chinese production base. The second thing is the quality of the transportation and logistics structure that supports that export business. That also cannot be readily matched by other lower cost locations, and that quality is only going to be enhanced. Since autumn of last year, Xi Jinping and the Chinese government have placed a very heavy focus on upgrading supply chains by applying the latest digital technologies, including blockchain, such that the Chinese supply chains can also meet concerns around transparency, visibility, traceability, and resiliency, which of course is more than ever an important issue during COVID-19 and in the post-COVID-19 world. So what has been the impact on carriers? At the start of the year, going into this downturn, there was a great deal of concern as to the financial health, sustainability, and the capacity of the carriers to weather this storm. If you looked over the previous 10 years, the industry had struggled to deliver a sustainable performance in terms of financial metrics, whether you look at return on capital or, as shown in this top left graph, average EBIT margin. Now, perhaps surprisingly, in the first 2 quarters of this year, the lines have posted a surprisingly healthy performance. This has been underpinned by a number of factors. The first is significantly lower operational costs, due to low bunker prices. They've also done a significantly better job in managing capacity. As the graph on the top right shows, a significant portion of capacity is out for scrubber retrofits, but also capacity is idle or has been laid up. Therefore, freight rates have been surprisingly high, and unusually, they have stayed at those rates for several months. Traditionally, what we see is a peaking of freight rates, and then new capacity, new services comes in, and those gains a bit away. That has yet to happen on this occasion, to the extent that the regulators are starting to take a close look at these freight rates. Forbes recently released some analysis of the financial performance of the top 10 lines, and they found that if you had invested in major shipping stocks in March of this year, you would be looking at an 85% increase in value, and that the biggest lines had added $23 billion of market value since that period. What has been the impact of COVID-19 on the structure of the industry? Probably too early to tell. But it's been the case that over the last 5 to 6 years, we've seen a fragmented industry, a traditionally fragmented industry, becoming more consolidated. The top graph is the position in August 2016. The grey columns are showing market share by capacity, by line, on the left-hand axis. The yellow line on the right-hand axis is showing a very simple measure of market concentration, the Herfindahl-Hirschman index. This was around 645 in 2016. If you look at the graph below, you can see a substantial bunching and increasing of market share, and equally a rise in that HH index, such that it now breaches 1,000, which is typically the level at which regulators start taking a closer look at market structure. Of course, if we dug in and looked at particular routes, you'd see much higher concentration because of cabotage and alliance structures. The question here is, will there be increased M&A activity because there are certain COVID-19 crisis bargains to be acquired? On the other hand, you might argue that even those lines that seem to be doing relatively well financially are certainly not out of the woods yet. And equally, would anyone want to take on additional capacity at the moment without surety of demand, particularly in an industry where failure to manage capacity, where surplus capacity has bedeviled the industry?
In terms of ports and terminal operators, again, we're seeing a variety of impacts. Sharp falls in cargo demand, but also actually sharp rises. So really the takeaway here has been increased variability. This has led to concerns about buildup of import boxes, recycling of containers to Asia for stuffing, particularly as we're seeing demand recovering in export locations. India and China manufacturing PMIs just hit a decade high. In terms of port operations, obviously the health and safety and strict containment measures have heavily impacted the ability of terminals and ports to continue operating, especially in those locations that are heavily dependent on labour. Fully automated terminals have been less exposed to the health impacts, both in terms of operations within the terminals, but also vessels and crew changes, for example, and possibly have more flexibility in capacity management. Because of generally subdued demand growth, those ports that had expansion plans have, of course, generally deferred those until demand risk is eased. But conversely, in certain locations where ports were operating under congested conditions at high utilization, COVID-19 has provided a temporary easing and an opportunity to move forward with capacity enhancements and upgrades. We still see plenty of privatizations, PPPs, and port asset disposals coming to the market, including some acceleration in certain locations where there's fiscal pressure on government resources and a desire to bring in new capital. Will COVID-19 accelerate digitalization, especially around smart port ecosystems? Again, it seemed likely that may be the case, particularly given the desire to reduce person-to-person interface, those risks within the supply chain, but also, to my earlier points, enhance the quality of supply chain sustainability and resilience. In terms of measures to address decarbonisation and climate change mitigation, again, difficult to say whether we will see that accelerating or slowing. Certainly in the case of case of climate change mitigation, there is an urgent need for a number of ports to address this challenge. And of course, the impact of COVID-19 will constrain the capex appetite, the ability of various ports and terminals to invest in new initiatives, invest in new capacity and mitigation measures. So what is happening in terms of modal competition? For some years, the increasing quality of ocean transportation and its all-pervasiveness has been taking some modal share from air freight. And because of the huge imbalance in terms of the overall capacity that sea freight offers, which dwarfs anything available in the air freight sector, it is possible for sea to take modal share from air freight. It's very difficult for the opposite to hold true, simply because it is not significant. COVID-19 appears to be accelerating this trend, if anything, as demand for items that need to be moved by air has continued. It has only increased, in fact, because of things such as e-commerce, but also the requirement for PPE, medical equipment to be transported. And this has happened at a time where air freight capacity has been substantially reduced because passenger planes have been taken out of service, and that belly capacity was a key component of the overall air freight network. Therefore, air freight rates have spiked quite considerably, as we saw, and can be shown in this graph on the bottom left. And even though the rates have come down from that peak, they're still substantially above what we were used to seeing around 2019 and right at the start of the year. Therefore, 3PL's shippers are increasingly looking to expedited sea freight services. We're also seeing new products. So, for example, sellers on Alibaba.com can now buy sea freight space directly from Zim. We're also, for the China-Europe leg, seeing more use being made of rail, for example. So a number of freight trains in the first half of 2020 increased by 36% for China to EU. And we've also seen congestion emerging around July and August at key points such as Wuhan and the Kyrgyz transshipment hub. The final takeaway would be around the readiness of the cool chain and air freight capacity for COVID-19 vaccine distribution. Clearly a huge requirement here, particularly to note the observation from B2G Consulting, that if you simply looked at the number of vaccines that need to be distributed for 3/4 of the world's population and booster shots, it's equivalent to 12,777 freighters. On the other hand, it's probably the case that the immediate need will be much less, because the target will be to get those vaccines out to at-risk populations such that they are protected and then economies can reopen. But nonetheless, a major challenge. Thank you.
It's my particular pleasure to be able to welcome our third speaker today, Bharadwaj Bhuyan from the Japanese container line Ocean Network Express, who will talk to us about the specific challenges that refrigerated maritime transport has been faced this year, and hopefully also give us a view of what we can expect in the future.
Good morning, good afternoon, and good evening, everyone. My name is Bharadwaj Bhuyan from Global Reefer and Special Cargo Division in ONE ZHQ, Singapore. And it's my pleasure to join you all in today's webinar in Cool Logistics Asia 2020 event. Topic of my today's presentation is related to key trends in global reefer trade. And I would like to take you all through a few slides focusing on a few of the key agendas as listed in this slide. We will discuss about the current and future forecast of world reefer trade demand, impact of COVID in the global food supply chain as well as perishable cargo trade, as well as supply and demand factors which are affecting the reefer trade in general. Taking this opportunity, I would also like to briefly explain what efforts as a key refrigerated container carrier ONE is taking in order to serve the perishable cargo industry needs in the near future. This slide talk basically illustrates the current state of world trade as well as containerized reefer trade. I would like to draw your attention to the top left graph, headline named as Industry Summary, which basically aims to summarize the performance of global containerized trade on a YY basis. That is January to July 2020 versus same period in 2019. Overall, global trade is down by minus 5.4%. And not surprising to see that due to lockdown, some of the industry segment, such as fashion or automobile, or the consumer goods industry, was heavily impacted due to COVID. Silver lining, of course, is the temperature control segment, which continued to grow very well with the 4% YOY growth this year. Below chart talks about the reefer and the dry cargo demand projection from 2020 to 2024. This is a chart from Drury. So it shows that from 2010 to 2019, so first 9 years, actually the reefer trade and the dry trade actually grew almost in the similar pace. But after 2020 to 2024, so Drury expects the reefer trade, which is indicated by the purple line, magenta line, I would say. So magenta line, the performance would be better than the dry trade in general. Now, the top right chart talks about the temperature controlled origin regions, refrigerated container origin regions. So this is again January to July 2020. So as we can see here, South America continued to perform very well in 2020 in the first half, with more than 1.2 million TUs of performance. These are all TU. So with 10% growth, despite the COVID-related slowdown, Western Europe as well as Central Europe also performed very well. In the meantime, Northeast Asia, which is basically contributed by China as well as North America, reefer exports was impacted due to COVID-related disruption. Now, the bottom right chart talks about the top 10 refrigerated container origin countries. So as you can see here, top 10 countries, all of them perform very well actually. So except India. So unfortunately, India had a very heavy setback due to the COVID. But other than India, all the key countries in perishable refrigerated container trade has performed very well. It goes to show that the government of these countries actually gave the food exports the essential industry status during the COVID-19, which definitely helped their exports. Now, a little bit more about the resilience for the reefer trade during COVID-19. As we saw in the previous slide, the container trade performed very well. So with the 4.3% YOY growth, it's actually due to the higher or broader resilience of the food supply chain. Why? Because more than 90 or 95% of the reefer trade by container is related to food. And no matter what is the economic situation, people still need to eat. So, but what is more remarkable about the performance of the global refrigerated container trade is that during the initial phases of the COVID, the containerized reefer trade also faced a lot of challenges in the beginning. For example, it could be related to port congestion, or it could be related to availability of the reefer containers at the right place, or it could be related to lockdown, which is impacting the traffic or the transport flow. So despite all that, I would say the containerized reefer trade was able to work around these challenges and posted a strong growth. So reefer trade this year was strongly boosted by the pork imports to China due to the African swine flu, which is illustrated by higher percentage growth in Europe to Asia Pacific, as well as North America to Asia Pacific. So both trade lane actually grow by 19% and 7% YOY compared to last year. And this is significantly contributed by the pork import to China. Actually, demand of pork import to China was so huge that it also positively boosting the other proteins, which is like poultry or seafood to China. To put some numbers into perspective, right? So this year, first half in 2020, China imported more than 2 million tons of pork meat, pig meat. in 2020. So first half 2020. So this is about 153% increase compared to last year. So you can easily imagine the demand for pork is actually driving the reefer trade in general, especially from Europe and North America to Asia Pacific. In the meantime, frozen seafood volume was heavily impacted due to the lower demand in the food service industry, such as restaurants. At the same time, we saw that frozen vegetables demand was actually increasing as the consumers look out for the convenient and the longer shelf related food during the lockdown. This is actually helping the Europe to US exports. So 7% growth actually is contributed by the frozen, big portion is contributed by the frozen vegetables. At the same time, the fresh fruits and vegetables cargo enjoyed a significant boost this year as the consumers tried to maintain their regular intake for a healthy diet. Especially in China, e-commerce growth is actually contributed to strong fruit import. So this year in 2020, China imported 15% more volume of fruit compared to last year. So definitely it has helped, especially the Asia Pacific regional trade. So Asia Pacific regional trade also grew by about 8% YOY. So generally overall reefer trade we consider about more than 10 million TEUs. So Asia Pacific region combined, it contributes about more than 2 million TEUs. So it is a significant portion of the whole pie. So yeah, I mean, just hugely contributed by the fresh produce demand within intra-Asia or Asia Pacific region. Now, let's talk about the impact of COVID in different reefer commodity segment. As you can see here, the COVID impact to reefer commodity is not uniform, right? So it's no secret that benefits of certain fruits and vegetables in boosting the human health or immunity system or as a source of vital nutrients during the COVID-19 pandemic has been really instrumental in the global demand spike for fruits and vegetable segment. So as we can see here, one good example is the South Africa reefer exports. So South Africa citrus exports, I'm sorry. South Africa citrus export this year is posted to grow about 17% YOY in terms of tonnage. Similarly, Peruvian citrus in terms of export value has grown about 43% YOY this year. Similar trend is also visible for other fruits and vegetable segment, especially for the fruits which has high contents of the antioxidants, right? Like blueberries or kiwi fruit. So demand has been very strong. Now for the meat segment, obviously due to the extraordinary health or safety challenges emerging out of the COVID, meat processing plants around the world have reported distortion or disruption in their operations. So whether it is a logistical bottlenecks or steep decline in the demand from the food service industry negatively impacted the meat trade in general. But nonetheless, I think African swine flu related demand, especially to China, positively boosted the meat trades, not only for pork, but other segments of the protein such as poultry or beef, or even seafood. Now, dairy demand related to food service sector has been definitely impacted, like cheese, ice cream, and stuff like that. But definitely some commodities like egg volume has increased this year due to the increased demand for home baking during the lockdown. So obviously, as you can see, it is not uniform. The segment-wise, the impact of COVID is different. Seafood industry, especially for the high-end segments like lobster, fresh salmon, are heavily impacted because they depend on the food service industry like restaurants. But the retail sales like of the non-perishable items like canned tuna has improved a lot. Now, demand for healthcare, medical supplies, pharma is generally higher in COVID during the COVID period, which is no surprise, right? So this year, obviously, there has been a lot of focus for transport of the pharma-related products. COVID vaccine distribution in near future by air freight is also expected to displace some of the traditional air freight cargo, including the pharma, and this may come to ocean freight more. And from a ocean carrier perspective, this is a very interesting trend for us to follow in future. Frozen cargo demand in general is boosted by the demand for the convenient and longer shelf life foods during the pandemic lockdown, which is no surprise, which is easy to understand. The fresh cargo demand is mainly driven by the healthy lifestyle need during the COVID period. Now, let's talk about how COVID-19 actually fueling some of the changes in the food supply chain. So even before actually coronavirus outbreak, the food supply chain was in transition. So forces at play. I've tried to list a few of the factors or few of the changes here. So they are still the same as in the past, but COVID pandemic definitely has added fuel to quite a few of them as listed below. Generally, food manufacturing companies are taking opportunities of COVID to redesign their supply chain with the future resilience in mind. Now, let's talk a little bit about how these changes are affecting in food supply chain. So first of all, the changing consumer preference, right? So more than ever, I think the consumers nowadays are health conscious, probably after COVID more, and looking for fresh and additive-free food with the traceable origins. So which obviously augurs very well for the stronger demand in fresh produce industry. No matter where, one cannot eat only the locally produced food. So demand for the imported food is expected to remain strong in near future. Obviously, closure of some food service industry like restaurants or food service providers in schools, hotels, or catering businesses have shrunk the market for certain commodities like potatoes for the French fries, seafood or dairy products, etc. At the same time, consumers are going more digital to buy the food products, which is, I think, the key trend which has been highlighted during COVID. Now, increased focus in food safety. There is no evidence that coronavirus is transmitted via food or food packages related products. But yet, I think we have seen already in the recent past that food safety regulations are expected to become more stringent in near future. So blockchain, which is obviously not a new technology anymore, but it is considered as one of the promising technology, which can help to build the trust for transparency and the security issues in food transport. Obviously, other measures like biosecurity arrangement in the food manufacturing plants, it has become also paramount important during the COVID period. Now, acceleration of Industry 4.0, I think it is not a new trend, definitely, but COVID has accelerated the need for digital technologies in food supply chain for building stronger resilience in the future, whether it is related to robots or track and trace tools or technologies which are available and which can help to identify the loopholes in the food supply chain, or even the artificial intelligence for revolutionizing the business processes for reducing cost and risk. This kind of digital technologies would be very much in demand in future, and this trend is expected to continue even post-COVID. Decentralization of the food manufacturing. So I think it is pretty simple. In order to avoid the COVID outbreak in the big plants, the food manufacturing companies are trying to look at the option of decentralizing the food production to smaller units to minimize the risk. So increasing volatility in the global trade. Obviously, we have seen this year the risk of political tensions, trade war between the big nations like US and China. Now geopolitical, the other activities, US election, then trade war, then in general, the uncertainty related to second wave of COVID. I think it is increasing the volatility of the global trade, and obviously food supply chain has been also accordingly impacted. The increased demand for cold chain, I think this is also nothing new, but all these factors, all these changes are also pushing for increased demand for the cold chain, especially for the last mile logistics, as the consumers are going more and more online to buy fruits and vegetables or other perishable goods during the COVID period. So this trend for demand for cold chain is expected to grow further. Now, I would like to draw your attention to this slide, which basically talks about the forecast of global reefer trade demand, which is the seaborne perishable reefer trade forecast, which is from Drury. So as you can see here, according to Drury, so in 2019, so seaborne perishable trade grew to about 130 million tons in 2019, and Drury expects this particular trend to continue until 2024. So obviously, with a CAGR of 3.7%, it's a good indicator that seaborne perishable reefer trade demand remains strong in the near future. Now, this is one interesting slide which talks about the modal split between containerized and conventional reefer. So seaborne perishable trade is basically carried by conventional reefer, which is the reefer boats, as well as containerized reefer. So according to Drury, so seaborne perishable trade, basically reefer containers contributed about 87% of the seaborne perishable trade in 2019. And Drury expect this to continue to grow to about 92% in 2024. So which is obviously a significant factor for the demand of reefer containers in the near term. So if you take 130 million tons of seaborne perishable tonnage and take 87% of this is containerized trade, so you will get to a figure about 114 million tons. So if you take 114 million tons and divide this by about 2.5 or 21 metric ton, 21.5 or 21 metric ton in a reefer container, you'll get to a figure about 5.3 million FUs, which is basically trying to show here, which is the forecast of the global containerized reefer traffic. So it is the containerized reefer traffic only. So in 2019, so the containerized reefer traffic grew to about 5.3 million FUs. And according to Drury, the forecast for global containerized reefer trade forecast is actually higher than the seaborne perishable. So seaborne perishable from 20 to 2024 is expected to grow about 3.7%. But at the same time, for containerized reefer trade, so growth rate has been higher than generally the seaborne perishable trade, which is basically due to the fact that there is continued modal shift from conventional to containerized trade, as well as increasing demand for the growing middle class population asking for the healthier food options and also the year-round availability of the good foods. Now, this slide talks about the global reefer container production and its relation to the fleet growth, overall fleet growth. So we consider that globally, all carriers in 2019 had a fleet about 3 million TEUs. So it grew by about 3.6% in compared to 2018, and overall fleet by all carriers reached about 3 million TEUs. But the key point is that the new reefer built injection, right? So new reefer built injection is a very important factor, especially for people who are experienced in the reefer perishable containerized trade. They would understand that it is very important for as an industry to maintain a level of healthy injection into the reefer fleet. So generally we consider thumb rule is about 300,000 TEUs of injection is required every year. So last year injection was about 260,000 TEUs, which was below the benchmark. In 2020, thanks to the better financial situation of all carriers, so Drury expect that overall reefer production will increase to about 280,000 TEUs, which is very nice. And going forward, the reefer container new build will continue to increase. But the key point is that majority of this new injection is basically, not majority, but at least a significant portion of this new injection is to take care of the off-hire or the old age units. So for reefer containers, there is a need for replacement on the regular basis because of normal wear and tear, and it carries the perishable cargo, so the container needs to be in a perfect condition. So it is important to do the replacement of the old units on a regular basis. So that's why this particular injection every year is a key determinant of the reefer container growth every year. So everybody focuses on this point. This year, obviously, due to the tight capacity and extended dry peak out of Asia, a lot of carriers are focusing on the NOR segment, which is a non-operating reefer. So it is actually, in a way, it is good because it helps us to reposition containers from surplus origins, which is in Asia, to the demand origins, which is in the other part of the world, right? But at the same time, it extends the reefer turn time. So generally, the reefer turn time we consider about 3.5 times in a year. So with the more NOR or more non-operating reefer lifting, we expect the reefer turn time to further deteriorate. It will increase in the meaning that it will increase. So the demand, there is a potential for the shortage of reefer containers in the near term, unless this new reefer injection continues to increase in the near future. Now, let me also take this opportunity to explain how ONE is contributing to the reefer growth story. So obviously for ONE, we had a unique advantage of combining the best practices of three legacy Japanese carrier who used to carry a significant portion of perishable products. So our culture, our ONE culture is based on the Japanese philosophy of Kaizen, which is about continuous improvement of any operations, right? So as a leading carrier in the perishable, refrigerated perishable container segment, so ONE is basically actually the fourth largest carrier in the world. But we continue to regularly expand our reefer fleet with a new investment. So I think since inception, we have been regularly investing in reefer containers. So 2018, which was the first year of our inception, so we invested about 14,000 new containers. So in 2019, we invested about 6,000 new containers, and 2020. So I think it is one of the highest among all carriers. We are investing about 13,500 new containers this year to come to our fleet, join our fleet. So it goes to show, it reiterates the ONE's commitment, strong commitment to the reefer container segment. We continue to maintain a strong emphasis or focus on building our controlled atmosphere technologies, which basically helps to extend the shelf life of the perishable fruits and vegetables, and which is very helpful for our customers in, especially in South America or South Africa or Australia, New Zealand, or even in some countries within intra-Asia. So ONE has one of the largest fleet of active CA containers in the market. And we are focused in growing this segment in the years to come. Another strong point about ONE reefer fleet is that your fleet is relatively younger compared to the industry average. So our fleet is currently about 6 years of age, and which is also being helped by the fact that ONE has a very high portion of the lease fleet. So majority of our fleet, more than 95% of our fleet is actually lease fleet. So it helps us to maintain, for maintaining a flexibility in terms of maintaining a good age of our reefers in order to maintain it in a good condition to carry the refrigerated or perishable cargo. Combined to that, we also have a robust repair maintenance policy, which helps to maintain our fleet in a proper condition for carrying the perishable cargo. Sorry. So this slide talks about the reefer, the ONE participation in some of the key refrigerated cargo seasons around the world. So whether it is avocado or bananas from South America, or citrus or grapes from South Africa, or intra-Asia market, fresh fruits and vegetables in intra-Asia market, or grapefruits from North America, or other fresh fruits and vegetables. So ONE has been significantly boosting our capacities, as well as we are offering innovative solutions and optimized services to our customers to meet their diversified needs. Of course, we are also strong in other segments of the cargo, for example, like meat, seafood, or dairy, or even pharma. But for the purpose of this presentation, I'm trying to show some of the key seasons where ONE is participating in the perishable fresh produce industry in the world. So this is basically my last slide. I would like to summarize by saying that despite the initial challenges, as we already discussed in the first part, so reefer trade has again shown its resilience among considering the economic slowdown, and it is mainly due to the broader resilience in the global food supply chain. Although the impact of COVID-19 actually varies among the different reefer commodity groups or segments, as we have seen, some commodity segments in reefer, definitely being helped by the COVID-19, but other segments like seafood or dairy, especially catering to the food service industry, it has been impacted due to COVID. So forecast of global reefer trade in general, it's expected to remain strong. So it is augmented by customers' preference for the healthy food choices and also the population growth demanding for the better foods. And also the growth of e-commerce is definitely driving the growth of global reefer trade. Future model split conversion from conventional to containerized reefer is expected to maintain a steady demand for our refrigerated cargo segment in the near future. In general, as an industry, 2020 was a good year because all carriers invested in the reefer containers. But whether such trend will continue in 2021, 22, 23, in future, it is yet to be seen. But as we know, in reefer industry, it is very important to maintain the healthy rate of new injection to maintain our containers in a better condition to carry the perishable cargo. COVID-19, of course, it is fueling the few key changes in global food supply chain, where all stakeholders, including all carriers, needs to play a part in creating more resilient food supply chain for the future. Thank you very much for your attention. That's all for my presentation. Thank you.
Hello, I'm back again from London, this time with Andy Connell from A-Bar Sea Services in South Africa. We are pleased to be able to welcome an interesting panel this afternoon, which will be covering perishable logistics as well as customers of the logistics chain. So we are trying to have both parties come together. I couldn't imagine any person better to be able to help me co-moderate the session than Andy Connell, who indeed has actually been fighting on both sides of the fence, representing the interests of the perishable logistics community and also at some stage the interests of a shipper, notably Dole South Africa. I will be asking Andy to tell us a little bit what we can expect from this session this afternoon.
Thank you, Alex. Good day to you and good day to everybody attending. Well, what a year we've had, 2020, and COVID-19 has really changed what most of us thought we knew about logistics and about supply chains and even about perishables, getting them to market. We've had to really go back to the drawing board. We've had to start learning all over again. We've had to become discoverers all over again. And we've gathered a panel of experts here who've all been affected and have to really call on all their expertise because they've been affected by these events of 2020. All had to learn to cope around changing normals. It wasn't one change, there were many changes. And they had to cope and they had to still prosper. We hope to learn from them today how they managed their supply chains and how they managed to adapt to the sudden changes to a digital world. Everything became digital and paper was very difficult to process over this period with offices closed. And this year, everybody has been working remotely. and trying to do their work. And somehow the products have flowed and they've arrived at destinations. We all know this could never have been very easy. We'd like to learn how this happened.
Thank you, Andy. I'd like to introduce our first speaker, who will be Mark Aston, Head of Operations at ChillChain. Mark has kindly agreed to jump into Jack Fleming's slot at the very last minute. And Mark will be explaining to us the mysteries of the last mile, not just the last minute.
So my name is Mark Aston. I work at a company called ChillChain. We are a freight logistic technology platform that facilitates the transaction and the movement of chilled, frozen, chilled goods from internally within the UK, but also from Europe to the UK on road. So even though we do not specifically arrange or manage the transportation in air from, say, Asia or South America, we do have a lot of customers and a lot of companies that we deal with that do this movement themselves, and then we are the ones that help and manage the road transport solutions for them from the Europe or into the UK. So basically, I'm going to be spending the sort of 10 minutes talking a little bit around ChillChain, but also mainly around the Brexit problem come the 1st of January, how possibly the change and transition will happen, how I foresee this is going to impact the road transport industry, but not just the specific industry itself, but how it could possibly impact growers and issues that will need to be addressed come the 1st of January, whether it's just because you as a party are someone that is directly involved, or you use a external party, and everyone's going to be involved in this process, and it's going to change how the country runs. Especially at the moment, we sit at a point where we're, I think, around 50 days away, and we don't even know the last publication that was meant to be out at the start of November still isn't out, and we still don't know whether we're going to have a deal or not. So really, we have to think of a worst case scenario and how we're going to get there. So really, what is the current and traditional method for fresh produce providers? Well, really, it is we take a product from, say, Chile, from Asia. It is often shipped in containers over to Rotterdam. This is decanted into refrigerated vehicles, and then they are transported to the UK, whether that be Kent, Spalding, or another part of the UK. We help, and we have a lot of expertise in that movement from Hoogstraten auction in Holland, from the ports around that area, from Belgium, from Holland, but also, of course, we know there's a lot of road transport as well from fresh produce providers from Spain that also import and export out from the bottom of Murcia, as well as Italy, Croatia, etc. So really, what is the main issues come the 1st of January? The main issue is really no one really knows. What we do know needs to be addressed, and as soon as possible. There is a huge backlog in it anyway, but for example, if you want to do any trade with the UK come the 1st of January, you'll need to make sure you have an EORI number. This is something so simple, so basic, but without it, there will be no ability to do the trade, and that will be so important in what needs to be done. There is also the pretty obvious realization that everybody that is importing to and from Europe will need to do an import and export clearance. So you'll need to say, for example, let's just take that hypothetical scenario of cherries from Chile into Holland. You'll need to make sure that you have an export clearance from Holland, but also an import clearance into the UK. There is talk whether, and through the research, whether there will be a possibility to have that pass through on specific documentation. But of course, we have to just be prepared for the worst case scenario, and especially if you're a grower that's actually growing from Europe, and actually those goods are going through the transaction, we'll need to make sure that those import and export clearances are done. You've also got I think the most common and the biggest issue that you're going to find with this kind of import and export work, especially from the longer supply chains and the traditional supply chains, is the queues that are going to occur in road transport. you're going to find that there could possibly be up to sort of 26 to 48 hours worth of queues at the Dover-Calais crossing. That's not including Folkestone at the Channel Tunnel, and that then has a big impact on things such as Harwich and the Immingham routes and the unaccompanied routes. That will have a big impact on that, whether that's just in price or in time, because as capacity goes up, demand goes up, of course. So it's a real risk moving forward, and it will be with the collapse of air freight as well. It's going to be until that COVID crisis and air freight comes back to normal, there could be no option to have that ability to fly and move those goods quickly, especially those real perishable goods. So how do we overcome that? And that's some of the sort of biggest methods and problems that we're currently facing. You could be found that using the traditional method in the supply chain, that we could be stuck with only UK grown produce, which of course is not going to happen. But I think the biggest questions that we have to pose is the port infrastructure in the UK ready, for example? So you could look at shortening that supply chain up and moving your containers, instead of going, say, to Rotterdam, you put it on one of the longer term vessels that maybe stops in Southampton, stops at London Gateway, and so on and so forth. But really, is the UK infrastructure ready for that? There's already huge amounts of delays at Felix, though, just because of the 10,000 dry good containers that the government brought in of masks, and the delays that it's having on the whole Felixstowe infrastructure, whether fresh or dry. The hold up, they just can't process enough containers because there's a huge backlog right in the middle of the port, and that's just that's meant to be one of the biggest and best ports in the country, and also there's a huge cost of built, discharge and delivery. So you'll find that with a lot of providers in the UK, I'm not going to go out there and name names, but you will find that there's a huge proportion of those that have cold stores at ports that will maybe not necessarily be charging you huge RH&D costs, but actually they really charge you high on the delivery aspect. So whereas many of you will have customers that you deal with directly at the port of Rotterdam that will be able to discharge those products at a fair rate, because you discharge them into Europe as well. But then you just find that provider in the UK that can or in Holland that can deliver it to the UK, and that really brings down the cost. But then there's huge amounts of UK providers that really charge a real high premium just for getting that short route, maybe from a UK port into an English consumer, which can really add up, and it probably more than likely will only go up as the demand increases for the service, which will really add to the cost, especially if you're doing some very quick last minute banana transports, like pineapple transports from the markets or whatnot. There really will be a huge positive to find and uncover the quick and versatility that you'll need. So really, I think the best thing I would like to just go over is just sort of the solutions that I think that are out there, that also I believe that Chill Chain and that we are looking at and we can help with. So really, when you look at the long supply chain method, the key aspect to this will be the versatility. So you'll find that, of course, you always get a cheaper price if you use the Dover-Calais route due to the price of the ferry, and often you're using drivers that will then go into the UK and then export the goods in the vehicles. What you'll then find is, if there's a 48-hour delay and you're moving perishable goods, actually your value of that product will go down so quickly in those 48 hours, you can't sell it at such a high price, that actually using an overnight unaccompanied service that maybe costs £200 more in transport, so you've gone from £1,300 for a transport from Rotterdam to £1,600 or £1,500, is actually is a better investment, because you know it will get there overnight, whereas you may necessarily not have that if you go to Dover-Calais and you're stuck in a 48-hour queue, and you can't even commit and promise when you'll arrive. So really having that versatility and not just using one haulier, and that's something that Chill Chain offers, is that we have a huge amount of variety, a huge amount of haulier network in Holland, whether it's in Europe in general. We use huge, large, small, medium providers. We're able to really find and uncover that solution and be versatile depending on the market day by day, really, which is the most important thing. It's outweighing that price to time and service level. And also, if you are looking at shipping directly to the UK, firms that discharge goods will also be the ones that you'll look at as a provider and option. So one thing that we can work with is you can go to these providers and automatically get the transport removed, because one of our specialities is UK internal transport. And then because of that, we're able to, you can just make sure you get RH&D transport costs, you're really bringing down the cost, and we can make sure you're uncovered and find the cheapest UK internal price as possible, which is really making sure that you can provide that value at a shorter chain, because even though you may be spending more on the ferry transport on RH&D, the value of making sure your goods are in the country, maybe even a week earlier at times it could get to, is crucial. But what you want to make sure is you're not spending £1,500 to transport your goods from London Gateway up to Liverpool. You actually want to be spending £450 to do that, which Chill Chain is a service we offer. And one of the main things that we really offer is helping. So if you keep it to your traditional methods, there will actually be one of the biggest difficulties, and we've spoken with, or we know of, is, for example, the Spanish market. If you're an internal fresh produce provider, the Spanish hauliers are going to start charging €4,000 to move things from Spain, because they know they're not going to get a single export, whether that's because of cabotage rules, etc. This all lies depending on the Brexit documentation, but with that extra €1,000 charge, it's just going to make a huge price for providers to bring 26 pallets of cucumbers and tomatoes into the country. And that'll be the same for the Dutch guys. You know that a lot of the guys that move from Eastern Europe, Germany, Holland, those providers will start charging an extra £400-500 just to move produce, because they know they can't get anything back. But what's actually crazy about the UK market, and what we uncover with all the data that we have in our company, is that actually you get a haulier, a foreign haulier, will get paid more to move a full load of product from West Brom to Dagenham. So, like, for example, we're moving product from West Bromwich to Tesco Dagenham. You'll find that actually you'll get paid more to do that than if you are moving product from Birmingham, West Bromwich over to Belgium, for example. And the reason for that, and what that really brings, is that we're able to uncover a UK clientele that nobody really can access, because we don't just deal with fresh produce, we deal with a huge variety of products, and that can really help. So if we can work with these hauliers and make sure we're providing them export and backloads, not just export to the UK, but maybe just providing them 300-400 kilometers worth of distance for £400-500, that's actually giving them more rather than them traveling back empty, which more and more will have to do. And the more that travel back empty, the higher price it will be for your transport. So really, fundamentally, having Chill Chain access that UK internal market, whether it just be empty trays back from a production site of Tesco and Marks and Spencer's, who have cleaned the trays and they need to bring them back down to a pack house in Kent, we actually can open the door to that, which actually provides a fundamental overall cheaper price for the provider and the consumer. So really, that's I could talk for hours on the fundamental issues of Brexit and what could become, but I think that really a conclusion point is that the traditional method will still exist, it'll still be possible, but actually supply chains are going to have to be so more responsive and really responsive to not just the market price, but the market conditions. So whether that be in long-term solutions, whether that be in making sure you have all the import and export clearances done to prevent that hold up at Dover at any port, really. But on top of that, making sure that you can be versatile with your actions. You're not just stuck in one traditional method. It might be that you see a transition, you need to go to the UK provider. So you can find a solution with the cheapest possible solution that matches your cost structure, but also is versatile. But then on top of that, you also need to make sure that you have a solution and a possibility where you are, I think the best way to put it is, you're looking at the market conditions, you're seeing, right, there's a 48-hour queue, I'm going to drop value here, so actually the algorithm is telling me I need to use a higher provider. But you need to make sure you're not using one provider for that, you have the option for thousands, and that's the most important thing, really, when it comes to the 1st of January. But we are still all unknown, and hopefully as time comes, you just need to be as ready and as prepared as possible.
Thank you, Mark, for a very interesting presentation, and also giving us the latest situation on how Brexit is going to impact on the perishable supply chain, and to what extent a company like Chill Chain can alleviate some of the expected hiccups. Now I'd like to hand back to Andy Cornell. Thank you.
Thank you, Alex. Our next presentation is going to be delivered by Michelle Luton, who's the Director of Maritime Seabury Consulting. Michelle's going to talk to us about matching the supply and demand. Welcome, Michelle.
Good day, everybody, and thank you for taking the time to listen to my presentation on the reefer market outlook at this Cool Logistics Asia event. In this presentation, I will start with a global perishables trade overview and then focus on China, especially the impact of the swine flu. Then we'll take a look at intra-Asia and finally a brief perishables trade outlook for 2020 and beyond. Starting with the global overview. The perishables trade has been remarkably resilient during COVID. This is true when you see the orange line on the top. Only in the last month did perishables trade dip slightly into negative territory. This could have been a seasonal impact. The container trade, by contrast, has seen a big drop in the early part of the year, especially April and May, with an equally fast recovery that seems to be continuing. But still, overall, year-to-date, container trade is down by 5%, with perishables up 4%. By contrast, the air cargo trade is still down 12% year-to-date and saw the low point of minus 23% in April. All in all, we can conclude that perishables trade is fairly resilient, and that makes sense because people still have to eat, and most of the goods transported as perishables are edible commodities. If we look at where the growth is taking place, this is a chart showing year-to-date volumes up to August, taken from our global ocean trade database. We can see that the exports from South America, or Latin America, I should say, are particularly driving this. 7% growth to North America, 20% to Asia, and 7% to Europe. Also, Europe to Asia and Trans-Pacific trade in both directions, plus intra-Asia, are showing healthy growth. Also, Africa trades are doing well. So all in all, most of the major reefer trades are doing pretty well, leading to a year-to-date figure of 3.7% versus an overall containerized growth of minus 4.8%. So there's a clear contrast between what's happening in the perishables market compared to what's happening in the overall container market. Having said that, let's now focus on China, including the impact of the swine flu on the flows into China. China is now the largest perishables importer in the world. The growth in 2020 is 36%. That is very, very high, considering China was already coming from a seriously high base. But China has now overtaken the USA as the #1 destination for reefer imports. Japan, Netherlands, Hong Kong, South Korea, etc. They all follow at suitable distance. And as you can see from the growth rates, none of these countries have particularly interesting growth rates. Although maybe Hong Kong with a negative growth compared to China's 36 is noteworthy. But all in all, China is really the driving force. And without China's import growth, global growth would have been negative compared to the close to 4% positive growth that we're seeing now. The commodities that China imports are mainly frozen meat. All the other commodities, they show some growth, but they're not really noteworthy, whereas frozen meat grew 75% in 2020. So, frozen meat it is. When we're looking at frozen meat, the three main commodities there are pork, beef, and poultry. Beef and poultry are showing healthy growth levels, very healthy indeed, but from a lower base, and they remain very much second and third compared to pork. Pork imports have really taken off since 2019. You can see the orange line on the top, and this is clearly impacted by China's loss of pork production because of the swine flu in 2018. China had no choice but to import pork if they wanted to keep their demand satisfied. And Chinese people, they love their pork, so there was no alternative realistically other than to import it from places like USA, Spain, and Germany. And as you can see, also China banned pork imports after an African swine fever case in Germany. So even once you're involved in the trade, you need to be vigilant and need to make sure you stick to the Chinese demands, especially in terms of quality of the meat. Once there is a quality issue, then China can just as easily ban it. So it's a difficult trade to be involved in, but definitely the volumes are out there. What we also see as an impact of the swine flu, this is maybe not so much containerized trade, but as a bit of a sidestep, we see imports of animal feeds have soared recently. So China is importing much more animal feed. This probably also has to do with them recovering their pork herds. Then you need more animal feed to feed those pigs. And this is what seems to be happening as well. Also, soy and wheat imports have increased quite a bit, but that is maybe not so much related to this problem of having to grow the pork herds. The long-term target for China is to be 95% self-sufficient in pork. So that means this import of pork might not be sustainable in the long run because China wants to produce it themselves, but maybe some of the animal feeds of wheat and soy might in the long run remain. But this is very much a question from our side. We don't have the answer here, but it is very interesting to keep an eye on not just the pork imports, they might go, but on also some of the other commodities that are related to it that China needs to import. Now we'll take a look at the intra-Asia trade. Intra-Asia is showing strong export growth of perishables across most product groups, but clearly it's driven by fresh fruits and fresh vegetables. Fresh fruits grew 19% for almost 500,000 TU, or 500,000 ton rather. Fresh vegetables only grew 6%, but that's still 140,000 tons. We also put the air trade share there. So of 100% of air share, 29% of that was fresh fruits, 23% was other fresh products, and 19% was fresh seafoods. But as you can see, other fresh products and fresh seafood are quite small from an ocean perspective. So we think we should look a little bit into more detail into fresh fruits, because we know that on the air side there was a big capacity crunch. Many aircraft are not even flying anymore, especially wide bodies. So this clearly brings a problem with capacity. So we thought we'd take a look at the biggest commodity in air trade and what impact would that potentially have on the intra-Asia trade on the intra-Asian ocean trade. On the left-hand side, you see fresh fruits. This is all in tons, not in TU, so please mind that. What you can see is an example of fresh fruits on intra-Asia air. So that went down from 89,000 tons to 80,000 tons, whereas ocean went up from 2.5 million tons to 3 million tons. So quite a strong growth on ocean and a negative growth on air. So maybe there were examples of air commodities moving to ocean. The biggest example we could find was fresh grapes, went down 35% from Australia to China and Hong Kong. And it's probably shifted partially to ocean because on ocean there's a 14,000 ton growth. So it is probably true that for some industries, cargo moved from air to ocean. If we look at the impact that has on the ocean volumes, we took the 2019 volumes as an example. Fresh fruits by air were 121,000 tons out of a total of 415,000 tons. So if all the fresh fruits were to move to ocean in 2019, you could see that the impact is like 1% only of all reefer intra-Asia volumes. So if all fresh fruits in 2019 would have shifted from air to ocean, all 121,000 tons, that would hardly have made a difference to the reefer market. And this is actually the message that we would like to give. You read a lot about this air capacity crunch. And yes, in some instances, there may be opportunities there. But in general, the volumes that go by air are too small for ocean to be really of interest to start actively chasing those volumes. If you happen to be involved in the Grape Strait and you know your shippers there, yes, and you can supply the containers, then sure, it could be an interesting one. But you see that even a 35% drop for one commodity on one route is only 1,300 tons. So that is, not a huge amount of containers, I would say, that you would need for that. It may not be worth it to chase it, but even if all fresh fruits were going from air to ocean, it would really have a limited impact. So interesting to read about it. A disaster for the air cargo industry, but it's unfortunately not a big opportunity for ocean. Briefly then on the perishables trade outlook. In the long run, this is based on the Seabreeze forecast. We think the reefer cargoes will grow by about 5% per year on average, driven mainly by still Latin America. We still think that is where most of the reefer growth will come from. It will grow slightly above average. Asia will be slightly lower, and all the other regions, well, you can read the figures on the slide. We will do an update to this forecast. We're actually in the middle of doing that. So this forecast will be revised twice a year, but I don't think in the long run we should expect many major differences in the reefer market. It's driven by basics such as population growth and also income growth, where people can spend more on things like meat. And we also think that Latin America is still best positioned to remain ahead of other markets. A little bit here on Seabreeze Global Ocean Trade Database for you to read about where the data is coming from. I'm not going to spend time on it now. And finally, my contact details at the end of the presentation. That's it for me for now. Thank you very much for listening to my presentation, and let me know if you do have any questions.
Thank you very much, Michel Luton, for an excellent presentation on supply and demand, which leads me actually straight into the panel discussion with our three transport users. Before that, I wanted to give Mitchell Brook from the Citrus Growers Association in South Africa an opportunity to tell us how the citrus season in South Africa has panned out this year and the challenges he's been facing with perishable logistics in South Africa in particular.
I'm Mitchell Brook and I represent the South African Citrus Growers Association. Today's presentation is going to take you through our expected growth in volumes over the next couple of years and how we're going to tackle our logistics in order to ensure that we are able to export the projected volume that we're expecting to come into production in the next few years. Before I move on to that, I want to just explain from the South African perspective. We have three key export corridors that we have in our country, which we like to look at in isolation because we have very different characteristics that we have from a logistics point of view at each of the corridors. So if we consider from the Northern Region's corridor, which is mostly exported from the Durban port, we have fruit which is grown from KwaZulu-Natal through Mpumalanga, Limpopo, as far as Zimbabwe, which most of that fruit is exported out of the Durban port. In the Eastern Cape, from Potensi to Sanders River to the Eastern Cape Midlands, that fruit is exported from the Port Elizabeth and Kruger ports, and from the Western Cape, from the Western Cape to Northern Cape, that fruit is exported from Cape Town. We do find from time to time that fruit is moved between the different corridors if we do find logistics complexity, lack of a capacity, or, for instance, fruit that is moved to special types of markets where we only export from certain ports, so that fruit is moved to those ports for the exporting. If we look at the figures that you're seeing in front of you now, the table reflects in terms of our expected growth in volume, which we are expecting to see in the next few years, at least 3 to 5 years, because of these significant plantings that have taken place across Southern Africa. If we consider in totality, in the 2020 year, the export volume was 148.6 million cartons. If we look at going towards the next 3 to 5 years, we have an expectation of 175 million cartons. So from 2019 to 2023-24, we're expecting a 20 to 25% increase in volume. So if we consider from the northern region, this year 80.3 million cartons were produced and exported. In the next few years, we're expecting 91.8 million cartons. If we look at the Eastern Cape, in 2020, 40.9 million cartons were produced and exported, and we have an expectation of 53 million cartons. In the Western Northern Cape, this year in 2020, 27.4 million cartons were produced and exported, and we're expecting up to 29.6 million cartons to be exported. We are seeing a very big increase in lemon production, and we're also seeing a large increase in soft citrus production, in particular on the late mandarins, varieties like the Durkot and Tango. This is just a bar chart just to show you in terms of the volume growth that we are likely to see. So we're expecting a very big crop to come into production from the northern regions, which is going to put pressure on the Durban port. And we're expecting a significant increase in production from the Eastern Cape, which is going to put pressure on the Port Elizabeth and Coega ports. The Western Cape, we're likely to see strong growth on soft citrus, but we don't believe that we are going to see significant enough volume that's going to put pressure in the Western Cape. I'm going to run through basically a few key industry stats just to show you how we've identified the growth. From the northern region, we are seeing very strong growth in terms of lemons, late navels, and late mandarins, and we're likely to see a lot of pressure on our logistics during the weeks of week 26 to week 34, where we see late mandarins, late navels, as well as Valencia production commencing, which is going to cause a massive peak in production. Just quickly, I'm going to quickly highlight some of the developments that we are pushing through from the association side to ensure that our logistics chain is efficiently managed as we go into this production peak. We are going to see demand on transport supply. So we are expecting to see a lot more growth on our rail transportation. From Limpopo in particular to Durban Port, we have a strategy which is going to be seeing 10,000 containers per year moved by rail. At this point in time, we are seeing 2,500 containers this year, so we're likely to see a lot of more growth that is coming through. In terms of cold store capacity, we are seeing a lot of growth in terms of capacity in the Durban environment. In particular, the pre-cooled cold store facility, which has been developed by Maersk in the Durban port, which is going to see 12,000 pallets capacity increase, as well as the existing facilities in the Durban port have increased capacity at their facilities. We do see some complexity going forward. We have at our terminal, the Durban Container Terminal, we are seeing the berth deepening project on the North Quay, which is our substantial quayside, and we're likely to see some pressure on the berthing of vessels going forward. We do also see maintaining significant volume of specialized reefer shipments, and we're likely to see that to go forward. Specific port projects in the Durban port is the container truck booking system that Transnet are developing. I'm also going to show you a presentation on a barge network that we are hoping to introduce in Durban, as well as short distance rail from the Hammersdale area into the Durban port, as well as the pre-cooled cold store facility, which has a value add for the port. If we look at the rail development, a lot of that development is in the Limpopo area. We are likely to see cold store facilities being built around the Johannesburg area. Already existing facilities are built in Groblersdal, Nelspruit, Hoedspruit, Letsitele, Zanin, as well as Musina. We're likely to see some development on cold store capacity being developed there so that fruit can be transported from Limpopo to the Durban port for export. We are in the process of investigating the viability of introduction of a barge network in the Durban port, and this will link two very important facilities, the Modal fruit terminal and the fresh produce terminal, with empty containers and full containers being able to circulate around the port without needing to be transported around the port. And they can then take empty containers to be packed at these facilities, and then the barge will take them through to our main deep sea terminals for export. In terms of the Eastern Cape, we are also likely to see strong growth on lemons, also on the late navels and mandarins going into Valencias, so we are expecting to see quite a significant volume growth in the Eastern Cape ports. Again, transport demand is likely to exceed supply. We're also considering a rail development between the Addo-Sanders River area into the Kucha and PE ports. Cold store capacity is being developed at a very big rate in the Kucha port. Addo cold store and PE cold stores are increasing capacity. The APLR group are currently completing a cold store facility in the Kucha port. The Eastern Cape is also able to transport down to Cape Town to export from the Cape Town port if capacity is under pressure or if we do see any congestion and operational constraints in the Eastern Cape area. So a big factor going forward is the container terminals and their ability to handle the fruit exports from those terminals. That area is very prone to wind, and that's something that we are discussing with Transnet on how to create wind-bound strategies. We're also seeing a very big increase in specialized reefer shipments from the PE and Kucha ports, and we're likely to see that to go forward as well. In the Western Cape, a very similar picture. We're likely to see very big growth in terms of the soft citrus categories as well as the navels. Late mandarins going into Valencias, so we're likely to see two very significant peaks in the Western Cape. But as mentioned, we don't see very big infrastructure constraints in the Western Cape. The cold store capacity in the Western Cape is quite significant in terms of catering for the deciduous fruit exports, which is a lot bigger than the citrus exports. So we don't see any constraints on cold store capacity. However, our container terminal in the port are very prone to wind delays, and we are also looking at strategies on how to circumvent that. We are also seeing very strong growth in specialized reefer shipments from that port, and we're likely to see that continuing going forward. A very big consideration for us as an industry is the growth in terms of export of reefer containers. In the year 2020, 83,000 containers were exported from our three main ports. In terms of our volume growth, we are expecting at least 107,000 container worth of citrus to be exported within the next 3 to 5 years. So that's going to put a lot of constraint on the supply of empty containers, as well as the increased throughput through our container terminals. So we are going to need to discuss with shipping lines as well as with the key container terminals around how we're going to manage the growth in container shipments from South Africa. In terms of our pre-clearance inspections, markets such as United States, China, Japan, and South Korea are requiring pre-clearance inspection by the Department of Agriculture. We also have the Philippines market, which has been agreed upon for the commencement of the 2021 season. So we're likely to see strong growth in pre-clearance inspection markets, as well as cold treatment shipments from South Africa to the Far East specifically. So in 2020, we had 21.6 million cartons inspected by the department and shipped over to these markets. In the next 3 to 5 years, we're expecting at least 33 million cartons to be inspected by the department before exporting to these markets in the Far East. So pre-clearance markets and cold treatment markets are very much aimed towards the Far East, apart from the United States. So we are also looking at programs on how to manage that. If we consider in terms of our high-level strategies, as the CGA, the citrus grows, we are looking to increase our information collection and distribution, specifically around production and export volume, as well as collecting port information and vessel statistics to ensure that we are able to see how efficient our vessels are moving from our ports and how productive our ports are working in terms of managing our exports. Our container terminals and our rail infrastructure is managed by Transnet. We have a strong alignment with Transnet to ensure that certain initiatives are being developed to make sure that our export growth is going to be catered for. We have some very interesting information technology systems being developed in collaboration with Transnet as well as the citrus growers. We have truck booking systems which are being developed for containers that need to be delivered to the container terminal. We're also in engagement with Transnet around ensuring that equipment and port productivity is in place, that they can meet our expected demand. We're also looking at the optimal reefer plug capacity at the terminals to ensure that's managed in line with our volume growth. We are also looking at, in the Durban port, we have a problem with decongestion, and we have an initiative to look at ways around how to decongest the Durban port. The barge network is something that we are aligning to that program, where we can see assistance to decongest the port. As mentioned, we have a program with Transnet Freight Rail, specifically in Limpopo on the long distance, and Hammersdale, which is 40 kilometers outside of Durban, to increase the rail footprint to the Durban port. We are also engaging with Transnet to have a working structure between our industry and Transnet around making sure that our intended strategies are aligned to our growth, are going to be implemented ahead of our growth forecast. We are also looking at continuing our development of the Maputo port, which is very closely aligned to the exports from the Mpumalanga province, and we are continuing with that program. Also looking with shipping lines, evaluating reefer container supply during peak season. As I've mentioned, we have a very big increase in demand for containers going to come into our industry. And we're also looking at evaluation of reefer capacity on the vessels, particularly to emerging and growing markets. As I mentioned on the cold treatment shipments, we are doing an evaluation of the resource requirements for the department to ensure that we have enough resources to cater for the extra growth that we're anticipating. We are also evaluating infrastructure and equipment requirements, and we're also going to be looking at projects on how to drive efficiency into cold treatment shipments. Basically, that's a snapshot around our main sort of strategy program on logistics, and I thank you very much for the opportunity to present. My details are at the bottom of the presentation if anyone would like to make contact to find out or have any further information on my presentation. Thank you very much.
Thanks very much, Mitchell. Now to Oliver to provide us with a European perspective, how Spanish exporters have been covering this challenging 8 months this year. Thank you.
Hello everyone, and welcome here to Cool Logistics Asia 2020. I hope each of you are healthy and safe, and today you will see me only online, but I hope we will meet soon at any presential congress or meeting again. But let's go to the subject, because I want to show today COVID-19 and Spain's future fruit exports. And for this, we have already seen the effects of the COVID pandemic in the fruit business, and this was a very hard effect for many producers and exporters. And we saw a container jam, we saw stopped sea shipping, we saw insufficient hinterland logistics, cancelled flights, all this. But if we just analyze the effects between Spain and China, then we can see the impact of COVID-19 has been noticed in all Spanish exports, and which fell between January and April by 12.4%. If we look to the citrus exports from Spain to China, then we can be afraid, because there we are talking about 90% drop compared with the year before. So citrus season 2019 compared with citrus season 2020 is only a 10% in 2020 from the volume 1919. Why is this happened? Because the entire logistics has collapsed. If we remember, we saw this image. There was flights cancelled from all countries closed border, there was stopped factories, there was stopped the movement, the social movement. We saw accumulated containers in Qingdao, in Shanghai, in Ningbo, in Singapore. We saw accrued ships in the Asian seas, in the American seas, in the European seas. So many effects stopped the whole business or the whole flow of goods in the world. The second reason is because the local market, in my opinion, the European market, have demanded all goods from Spain. And this is meaning the European or the German supermarket, for example, wanted to guarantee the supply in his shops or in his supermarkets. We saw the same effect also in many other European countries like Italy, France, Portugal, or Turkey, for example, to supply the European markets and the European supermarkets. What does this tell us? We could see how fragile the worldwide global fruit trade is and how quickly our logistics reached its limits. And a very important reason for this is our dependency of reefer or with reefer containers from the normal dry containers. So when China's factories stopped, there's not enough traffic to bring back all the reefer containers, and there's not enough volume of goods to make possible that ships are working back to the European or to the American ports. Another reason is the lack of insufficient or the sufficient cooling logistics in many destinations. We have not enough cold store in China where they can unload these reefer containers who accumulated in Qingdao or in Shanghai. Yeah. Spain is now climbing to China to increase its food exports again. China is a very important importer, is a very important market, and Spain want to come back to export to China. But for this, in my opinion, we need to change things in the future. And these things, maybe we will start at the following points. We need smaller and faster ships that we can arrive to different points and to be more flexible. We have to export more knowledge from our agriculture and experience and start local production, for example, producing in China for the Chinese market or producing in China for the Malaysian market. And we need much better logistics for distribution, like cold stores, temperature controlled transport, and many things more. Thank you for listening to me. I hope we can discuss this later in the panel.
Thank you, Oliver and Mitchell. That gives us the opportunity now to get into the panel discussion featuring Rahul Bhakde from Zespri, China, and of course, Mitchell and Oliver. Thank you. Hello. I'm back here again with Andy Cornell in South Africa. Andy Cornell from ABAR Sea Services is the co-moderator for this session, and we're happy to be able to welcome representatives from 3 different continents, starting off with Rahul Bhakde from Zespri, Mitchell Brooks from the Citrus Growers Association in South Africa, and Oliver Huisman from Fruit Consulting in Spain. And of course, Andy, who is also, I think, based in South Africa, unless he's moving, I don't know. But let me just start with a question to all of you. The topic of this session is transport capacity and logistical risk. We have here assembled transport users, and I would like to ask you, first of all, briefly, to comment how COVID-19 has affected you, and how do you think the logistics service community can respond to your demands as customers of the perishable logistics community. So could I ask Rahul to come in first?
Thanks, Alex. I think it certainly did impact us in the beginning of the season, but not with the same extent in all the regions. For example, the lanes which have a bigger trade capacity between New Zealand and China were not as impacted as, for example, when we ship from New Zealand to Southeast Asia or from New Zealand to Africa. Um, they managed to get to some sanity around the end of second quarter, after coming out of that shock. But something that forced them to think long term. So the cancellation of the schedules, the blank sailings, came as a surprise, even for the lines, I think. And again, it goes back, I think it's not necessarily to do with the COVID, but it goes back to fundamental things around their visibility and their reliability, around those lanes. And that remains, in a way, ongoing problem for us, given that there are 100 different solutions on visibility, and having to work with different shipping lines. It's a problem that as an industry we need to address, and that obviously translate into a significant customer dissatisfaction, especially in the markets where we don't have our own presence. So in a summary, I'll let others comment on this, but first quarter was badly hit. Things started improving, after Q2.
Thank you very much for your comments. Let's immediately jump to South Africa now and ask Mitchell if he to respond to that same question.
Thank you, Alex. Good morning, and good morning to all our colleagues. Alex, it's a very good question that's being asked there. If we consider our transportation risks, we consider what we term the landside transportation. That would be the landside road and rail trucking to the ports. The second aspect would be obviously the transportation on the sea leg, meaning the vessels, whether it be the underdeck or whether it be containers into markets. So let's just put some context into both of those two different modes of transportation. When we initially started with the COVID lockdown in South Africa, it was the end of March. We were very concerned that the COVID was going to impact us in form of logistics as well as in the form of the market demand for fruit. So we kind of didn't really have an understanding of how the season was going to unfold. So the first and foremost issue that we were confronted with was on the sea leg. And that was the form of Transnet port terminals, reducing capacity at all of our terminals from about the 28th of March down to 30%. I immediately knew that was going to cause massive constraints for our industry, and particularly all industries in South Africa, which are relying on import and exporting of goods. Within the first week, we noticed 20 vessels were at idle outside our ports, and I immediately alerted our industry that was going to cause a severe backlog in us being able to export to markets if our ships weren't able to call to the ports. We then called out to our minister in charge of our ports. We called out to the Transnet board. We also called out to the Transnet management. And we had a very, very swift impact from government and Transnet level to reopen our ports to a level that we could still able to export and import containers. Unfortunately, at that point in time, the COVID impact had a very detrimental impact in the Cape Town port. And because I think we were all still new at the impact of COVID, particularly the virus itself, a lot of panic was set in the Western Cape. And a lot of staff were not coming to work, and that crippled the terminal quite severely. The other terminals weren't so as affected initially from the COVID. It was really the Western Cape which had a high incidence of COVID in the start of the lockdown. So as we moved in towards June, July, we managed to clear that backlog. And when we got into the peak season, we managed to get back to a level that we could still see our vessels move through the ports in a manner which could then obviously allow the exports to continue. So we were very fortunate to get to a point that we could get our shipping back on track. But now, having said that, the issue around the terminals and obviously with the goods that were not allowed to be imported and exported, the citrus industry and fruit exports was deemed essential goods, so we were able to export without any hindrance. What we were affected by was the lack of goods coming into the country which were not essential, and that impacted our road transportation. So we were able to export and transport citrus to ports unhindered through the COVID process, because our transporters and our exporters were registered as essential goods. However, when the trucks got to the ports, we found that there was no cargo to take back to the reef, which we know we're transporting 1,000 kilometers from our hinterlands down to the ports, and we had a very severe shortage of trucks. So that lasted for a good sort of 3 weeks, and as we got to around June, July, in the peak, our levels of lockdown were reduced down to level 3, and then we were able to get more goods coming into the hinterland. So we were then able to get trucks to the reef to transport back to port. So we were actually very fortunate that in terms of our transport risks, we were very much at the forefront of identifying all the risks that were coming into our country. We had a COVID risk committee, which was formed of our CJ board. And our board chairman, Mr. Cornel van der Merwe, as well as Justin Chadwick, our CEO, were really at the forefront of putting this together. And we were at the top and the front end of all our risks and challenges, and we managed to get through them, having got to the end of the season at 146 million cartons, which is a record season for us. And that, I think, is really down to us being on the forefront of our risks. So we had the challenges, and we were there at the forefront, making sure that we resolve those challenges.
Thank you very much, Mitchell. Let's bring in immediately Oliver Huisman, and discuss how the Spanish exporters have been affected by COVID. Is there anything which is fundamentally different from what our friend from China and our friend from South Africa mentioned?
Yeah. We have a very different situation in Spain, because Spain lost 90% of his citrus exports to China, 90%. So this year. But the reason is not only that the logistics not works. The reason is because the European market in the beginning of this pandemic grow with prices where the Spanish producer said, no, we sell in the European market, only in the European market. There's not a high risk in reefer containers 40 days traveling to China. There's more price, there's less cost in logistics. And in the other side, we saw, because Spain is a very important exporter of pork meat to China, and we saw that many containers, reefer containers, shipped to China without unloading. So what happens in Europe? In Europe, we have actually a situation. Some companies, industry companies, closed his production. We have less production in industry goods, in machines, in whatever. And with this, we have a problem with the logistics, because Spain, for example, now need trucks to bring his fruit to the German country, to the French, to the Dutch, to the rest of Europe, but there's no logistics from there to here. So now, this what they decided in the beginning of the pandemic is now a big problem, because the cost of logistics is now higher than the cost to bring this to China and back. Because, for example, if we see in summer, we have to pay 1,500, 1,800 euros from Valencia to Köln, to Cologne. Now the prices will be up to 4,000 euros for a truck. So this is a very short thinking what they does here in Spain, and with this they lost 90% of export to China, for example. 4 years, 5 years, 6 years working to open these markets together with logistics, together with marketing companies, together with clients. And now in one or some weeks, just in some weeks, they lost the market. So it's very different to come back now to supply the Asian countries.
Thank you very much, Oliver. Can I bring Andy in now, possibly trying to pull together these three different strands, experiences, and to see how the industry can move forward into 2021. Andy.
Okay. Thank you, Alex, and good morning, good day to everybody. Alex, I think what we all experienced around the globe was finding ourselves off our feet. This was brand new territory, and we all became students again in logistics. So what we had to do was find a balance. We had to find a balance between the essentials to keep a shipping string going. The reason the lines pulled strings and there were blank sailings was there wasn't enough cargo to calculate the vessel. It just wasn't worth moving the vessel with just that cargo. So we had to then convince governments that there needed to be a balance. And once we were allowed to also import fertilizers and chemicals, which were essential to production, and also offload from vessels and work cargo that was of a general nature, that enabled the lines to find the critical mass to put vessels back onto strings. And I think this is not a phenomenon, but it was just a global way of adapting and learning to make the logistics supply chains flow once again. And then as the lockdowns were lifted, more and more cargo could then flow in and out, not just the essential cargoes. I think the airlines were a lot harder hit than the shipping lines were, and are still suffering a lot more than what the sea freight has suffered, Alex.
Thank you, Andy. I think Rahul wanted to come in.
I think this is something that we already started doing this year as a part of our rebalancing between the volume that we ship through charters versus the volume that we ship through containers. And that's one way of, in a way, de-risking the reliability. We, in fact, like in China, typically we do on average 6 to 7 charters at the beginning of the season. This year we did almost 11 charters. And something that is on the table for us to explore as a long-term option, especially in the markets where the fortnightly size is good enough, to support the charter booking.
That is very interesting because that also mirrors, I think, the experience in South Africa, where we have seen actually a trend back towards conventional shipping this year. The question is, will that be repeated next year, or will the underlying trend of containerization continue or be slowed down? Mitch, can I get your response to this, please?
Thanks, Alex. Alex, just to respond to your initial question, I think Andy put it into context, but I think just to elaborate more on that, let's talk about what did we learn from this year, asking as we enter into the next season, 2021. As you know, South Africa, our citrus industry is going to grow by 25%. We've already seen that strong growth this year. So our logistics arena is going to be a very, very big and important part of our industry. Talking about what we learned out of this year is when the lockdown happened at the end of March, I think governments were scrambling around in terms of trying to draft different regulations around how to manage this particular thing. And obviously logistics was one area that got very affected initially. In companies as well, we were panicking, running around, scrambling, trying to protect our employees from the COVID, from the pandemic itself. We then later on, within 2, 3, 4 weeks, we learned that we could actually safeguard our employees at the same time as providing a service to our industries. And that's what the learning curve we got was our employees were not at harm's end or at the front end of COVID. when they came back to work. There were measures that were put in place that were able to safeguard employees by when you were doing your sanitization, wearing a mask, sanitizing your work areas, keeping your social distancing. And as we started to learn those habits, we then started to come back to work and get into our environments, not to 100%, but at a formidable level where our logistics systems could continue. If this pandemic is going to come back again, as we hear now, you've just mentioned to us earlier this morning, England is going back into some sort of lockdown measure. A second wave is likely to come. I don't believe we will be as panicked as we were in March. We will go into a hard lockdown. I think we've learned from that. I think we will still be able to continue our logistics environments, our employees going to work, feeling safe and being protected and not being at harm's way, but still providing the service that we are able to see. And that's the big learning curve that we've had this year, is dealing with the risk and having people not being too adverse to the disease itself, knowing that they can come to work and they're going to feel safe. That was the big step that we managed to get. So I think going into 2021 further on, if we're getting other forms of this type of risk, whether it be a pandemic or whether it be something else similar, I think we were much better prepared than what we were this year. So as Andy said, it was back to school, learning the basics, and we've done that. And I think we're going to be able to get through, hopefully, a better prepared for the future. As you mentioned,
I think I want to bring in Oliver in there and see whether he sees a similarly basically positive outlook for the Spanish exporters, particularly looking also towards shipping Spanish produce into China, where the situation seems to have been alleviated, so that we are not going to have the same problem as we had at the beginning of the pandemic in February, when the containers got stuck and couldn't be emptied, and led to this whole problem of connecting the dry box and the reefer box container shipping schedules, throwing them into disarray.
Yeah, Alex, you know my idea about what have to happen in the future with reefer container. My idea is smaller ships, faster services to different places, and not bringing 20,000 TEU container ships into Valencia port and then stopping in 20 or 25 ports up to Shanghai. So I think this pandemic, we have to learn. This is not the normality. This is not. We have a pandemic. Maybe we have this 2 years more or 1 year more, but this is not the normality. But we have to learn how we can work in situations like a pandemic, and how we can guarantee supply to the different places. And our fruit business is very, very dependency is this the English word, from the dry box. So when this pandemic stops all the industry production, Christmas lights or T-shirts, clouds, whatever, we are in the same situation in this moment, but we have crops. So, and this, I think we have to change. We have to change our working for our supply to smaller ships, and bring fresh produce faster and more punctuality to the cities or to the places or destinations where we need this fruit. And then we can work in the next pandemic and in 50 pandemics more, because we are not in dependency of the industry. And this is what we see now. We are the dependency of a big ship with 20,000 or 15,000 TEU containers, and we are in dependency of the normal industry and automotive industry. So, and this we have to disconnect in the future to make this more fluid. And we need for this also the hinterland logistics, because in Europe, for example, hinterland logistics collapsed. In China, we have no hinterland logistics because we have hinterland logistics to Shanghai, to Beijing, to Guangzhou. but not to the second or third tier cities. And in South Africa, I don't know the situation. How is the dependency of the hinterland logistics to port? So maybe Mitchell can tell this more.
We've unfortunately run out of time now, gentlemen. Thank you very much for your candid response, your measured response in terms of the hope as well. The supply chain has been actually proved to be incredibly resilient and being allowed to ship produce when it was needed. So I would like to thank you all for your participation in this panel discussion, and I'll have to call it a day now. Thank you very much to all. Bye-bye.
Thank you. Bye.
Thank you, Alex.
Now on to the final presentation of today. Looking at the port perspective, which is a presentation will be given by Ingrid van Streels, Key Account Manager, Shippers and Freight Forwarders from the Port of Antwerp.
Hello everyone, welcome to this session. I hope everyone is feeling well and being in good health. My name is Ingrid van Streels and I work for the Port of Antwerp. We are very enthusiastic and motivated about our participation to the digital edition of Fruit Logistica in Asia. We also thank Cool Logistics to ask us for a participation to this interesting session. Today I'm going to speak about transport capacity and logistic risk, and this being told from a port perspective. If you don't know the Port of Antwerp yet, I will give you a very short introduction. So we are the second European port and we are also ranked number 14 worldwide. We are a truly global port in a centuries-old city in the heart of Europe. Something small and nice, which I like to tell always, is that the first refrigerated vessel ever built was built in the 19th century. To be more exactly, in 1883. This vessel was carrying frozen meat from Argentina to Europe. On its way to Europe, it discharged frozen meat in Antwerp and then next going to United Kingdom. This was for Europe the first start of real cold chain and worldwide reefer trade. During this session, I will give you some insights of Port of Antwerp reefer volumes. I will speak about a more general reefer shipping outlook, some items which we think have a huge impact. I will also explain about logistic capacity for perishables trade in the port and how we plan for the future, and also how we try to be ready for the future and work on a virtual integration of cold chain. So, having a look at Port of Antwerp reefer volumes, when the lockdown started for us in Belgium, the first lockdown started in March. Today we are actually in the second lockdown phase. We really didn't know what the impact would be, but after a while we could conclude that we had a very intense increase of reefer trade. For the operational reefer containers, we can now year to date speak of an increase of 12%. So the growth of operational reefer containers is both in import and export flows. Something even more surprising was that conventional reefer volumes have shown an even higher growth, being an increase of 22%. This is in very high contrast with the evolution of declining conventional reefer volumes in previous year. This is due to the trend of containerization in this segment and also caused by the lack of reefer equipment. So conventional reefer vessels suddenly were used very intensively, much more than was the plan actually. So having a look at a more general reefer shipping outlook, we took out 4 topics which we think have a big impact on cold chain and perishables, and on which we for sure also feel impact at the port of Antwerp. So the reefer trade in general has performed much better than dry cargo trade during COVID-19. So that's something positive, of course. So the consumer demand for healthy food has grown since the beginning of the year, and it still continued to growing. Banana trade volumes has, of course, as a result, also grown. They were already forecast in 2019 to grow for 2020, and now the growth is expected to be higher and will continue to 2021. So many banana exporters, producers are looking for more capacity and logistic capacity in Europe. The seaborne reefer trade forecast to grow at an average annual rate of 3.7% from 2021 to 2024. A big cause of this is that the African swine flu continues to drive demand of proteins into China, into Asia. We have high export volumes going from Europe to Asia because there's a high demand of pork meat. That's something we see here in Europe. And shipping lines told us that they expect to foresee reefer capacity increasing to more than 40% because of this African swine flu. And this is linked to the third topic, which I would like to highlight, and you are certainly familiar with, is that reefer equipment availability is very tight. I remember at Cool Logistics in 2018, we were already speaking about this. Well, the situation didn't become much better, actually. Shipping lines have ordered large volumes of new reefer equipment, but the production came also to a halt down because of these lockdowns. And adding to that, we realize that we have a very old fleet of containers and reefers. So a lot of reefers are actually retiring, and we cannot replace them with new reefer equipment. So that's certainly now creating high rate and extra imbalance surcharges from the shipping lines, because they have a big shortage of reefers and also imbalance trades. Fourth topic, there's a lot of debate on this, are the high volumes of COVID-19 vaccines, which we are expecting as soon as the vaccine has been produced. We know that these will probably be moved by air freight initially, but they will take out so much air freight capacity to distribute these vaccines that we foresee that a lot of perishables trade, which is now traditionally transported with air freight, will potentially make a switch to maritime transport modes. Taking in account the reefer shortage, that's something today we cannot foresee what effect it will have, but it will certainly have an effect on the maritime reefer trade. Now, going to logistic capacity and how we plan for the future. This is a picture which is related to it. It's showing a picture of a typical dedicated perishables terminal at the port of Antwerp. You can see that container reefers are being discharged. This is a conventional reefer vessel, so it's a combination of containers being transported, but also fresh produce under deck is being transported. And you also see the cold stores located where the fresh produce will immediately discharge and being prepared to deliver to the market in Europe. Now, why am I showing this? Is that because as a port of Antwerp, we have been thinking of how should we prepare the port infrastructure for the future. So we see these developments in perishables trade, so we have an increase in consumer demand, we have reefer shortage, you have a trend for containerization, which now is becoming suddenly changing slowly because these conventional vessels are back in use. So we are defining some opportunities and some challenges. So first one is the investments in cold store capacity because of the growing consumption market. That's something we are looking at. I make an important note that this is not because of pandemic lockdown situation. So cold stores are not being built because you want to store more goods. The business model of a cold store is earning, getting income on movement of goods. So a cold store, we are not going to invest in a cold store only just to have more storage capacity. It would be to catch up with the increase of consuming the growing consumption market. So also more logistic activities. We are being challenged, and that's why I showed you the picture of the update of certain terminals. So today terminals are multifunctional and adapting to containerized transports. But still this is a challenge because you need to adapt your space, you need also to reorganize your warehouse. Now there's suddenly a slowdown in this containerization. So that's also a challenge we are following up. And we have a lot of projects in our port, which is an investment in multimodal connection for barge and rail. I speak of reefers transported by barge and rail, so that means that you also need reefer connection, and you need to be able to keep this temperature throughout the whole supply chain using these multimodal connections. Well, so those are some challenges and opportunities when speaking of logistic capacity. But at our port, we have also chosen to prepare ourselves. We choose for quality and not specifically for quantity. I would like to explain the GDP project to you. So our mission is to have all the stakeholders in the port community to be GDP compliant. GDP means goods distribution practices to transport pharmaceutical products. That means that we choose for a high qualitative, transparent ocean cold chain. If we are capable to organize this, we can for sure also provide a qualitative, transparent ocean cold chain for perishables. So we make the link for pharmaceutical to perishables. What are we doing and how are we preparing ourselves to be the first maritime port to be GDP compliant? We are creating a local GDP community, establishing guidelines and checklists. Participants in this GDP cold chains are the terminals, the maritime shipping line, the logistic players, and transport. Because a lot of companies today are GDP certified, but a lot of procedures are written out for air freight cargo. And today we are making the switch to maritime cargo. And that will result in a high qualitative, transparent ocean cold chain, and perishables will only benefit from this transparent and this qualitative cold chain. And how are we preparing for the future? I will explain you this. Within our Port of Antwerp, we have a specific vision on security. We all know the ISPS, so physically fencing of the entire world or port, already implemented more than 10 years. Today, we are taking a step further and we are creating a digital net in our port. It means that all movements of people and goods must be known. We are putting sensors, smart cameras, and drones, and each person should be able in the port to identify itself. We know who is going where, who can do what. You need to be authorized to work in the port. We are even taking a step further because we are working out a certified pickup system. And this is related to container transport. And that's the reason I'm explaining this. Containers today are in many ports released using a PIN code or a kind of release document, and then this driver goes to the terminal and gets the green light for pickup of the container. We are going to switch this process to a 100% digital process and also to an identification-based release. That means that PIN codes won't exist anymore. You will be able to transfer the release right from party to party, and at the end of the chain, the driver will have to identify itself at terminal using its fingerprint. So that's really a huge milestone into this process, and more ports in Europe and outside of Europe are looking into this system to implement this new digital system. And the link with perishables trade is very obvious. We do not often talk about this, but you of course know that a lot of illicit cargo is being transported, and perishables trade is often the favorite kind of cargo chosen by drug smugglers to import this kind of goods into countries. By implementing this system, we are 100% convinced that we have a digital, secured way of picking up containers and knowing who is doing what. Now, that being said, I would like to close my presentation, and I give the word back to you, Alex. Thank you. Bye-bye.
Thank you, Ingrid. This brings to the close the first day of Cool Logistics Asia, where we learned a great deal about how the shipping companies and the transport user community have been facing the challenges of COVID-19. On the second day, we will be looking at more in detail fresh food and general food logistics case studies, and we'll see you tomorrow. Thank you.